Hi, I'm Tom Tobin, Head of Healthcare Research here at Hedgeye. Earlier today we held our themes call update for November. We covered a few of our major themes, including utilization headwinds, which we've seen transpire through Q3 earnings. It indeed wasn't an easy comp. One of our broader themes of healthcare deflation, which is continuing to emerge and looks to worsen in the years to come, as well as Emily Evans covered policy implications and changes that are ongoing through tax reform and other healthcare regulatory pressures that are ongoing. Our healthcare position monitor here on a fundamental side, you can see our longs and shorts. We covered stock briefs during the call. We also have a healthcare policy position monitor as well, where we try to overlap both the fundamental and the policy views. We've done pretty well through Q3 and for 2017 when we look at the stocks that we've had on both the long and the short side relative to the broader market. Again, we covered some of those stock briefs through the earnings season thus far on our call. Our outlook that we established for 2018 back in the 3Q call mid-year continues to come our way as it relates to a lot of the incremental pressures on the insured medical consumer. You can see that here on slide 6. The basis of that is really provided by our insured population model, where we look at the insured population by payer type, by age and insurance status. That you can see here, where we can continue to see the slowdown and decline in some of the parties, including particularly on the Medicaid side, which I think is going to be incredibly relevant and increasingly so as we head into the end of this year and particularly into next year. On the deflation side, this deflation crisis is a slow-moving car wreck, which we think is going to take some time to unwind. We're going to see margin pressure. We're going to see those companies that have the best pricing leverage emerge with, I think, premium multiples, while those companies that are going to suffer are those that get exposed as this inflationary tide rolls out, and we see who's actually got pricing leverage and those who don't. Healthcare employment is a really good indicator of healthcare demand, given the relationship between delivery of healthcare by people and not really having a lot of economies of scale. Therefore, when we're seeing healthcare employment essentially return to normal levels in terms of growth rates after being exceedingly high under the Affordable Care Act as a leading indicator and coincident indicator of slowing utilization, this is one of the foundational pieces of our overall thesis of why we're broadly negative on U.S. healthcare and the U.S. healthcare medical economy. One of the things that came out during the call that we've talked about for some time is this mix shift, which is set in stone essentially in the United States, where the Medicare, that green bar, is going to get wider over time, while the commercially insured population actually shrinks over time. And with the added cost pressures of copays and deductibles ongoing, we think there's going to be a pretty massive mix headwind for the U.S. medical economy, particularly for the U.S. providers like HCA, some of the other names that were short in our position monitor. One of the reasons for that is that the largest and most profitable segment of the U.S. medical economy is that 45 to 64-year-old who is generally commercially insured. They make up about 30% of the total spending. They're going to be shrinking and taking that excess margin with them. Meanwhile, the government payer, either through primarily Medicare growing 3+% and Medicaid essentially being that for the less economically advantaged among us, being a bigger portion of the reimbursement pie and coming with much, much lower margins. You can see this a different way if we look at the working age commercially insured population plateauing well into 2020, middle of the next decade, 2025 and beyond, while the retirement age population above 65 just hockey sticking up. Again, when we talk to operators, they talk about 0 to +5 margin. That's going to be a huge headwind up and down the P&L of anybody who participates in the marketplace. That you can see on the right-hand side of that chart, where the commercially insured payment rate is well above the Medicare rate, while Medicaid is slightly below. On the policy front, we've got a lot going on, both administratively and legislatively. The most recent legislative efforts across tax reform, we think there's going to be some healthcare specific items within that. It's mostly going to be, there are some benefits to repatriation, but the individual mandate being ended hangs on in the background, as well as some of the tax advantagement of employer-sponsored insurance we think is going to be at risk through tax reform legislation, which we think will hit Congress and become more fully formed sometime in early Q1 of 2018. Medicare rule season is over. There was a lot of good news and bad news, but mostly bad news, particularly for inpatient hospital. And there's also a lot of executive order and administrative actions, which we touched on during our call, and is an ongoing research effort by Emily Evans here at Hedgeye. On the tax reform piece, this waterfall just shows you what the whack-a-mole setup looks like in terms of where the revenue income versus the revenue offsets really are going to come into play in the legislative process, as those who complain most bitterly probably get their way, but not necessarily. We can see that at least on the repatriation of foreign earnings, as well as the tax, high marginal tax rates in U.S. domiciled companies. On the next slide, you can see financial services is well exposed. Healthcare has a ton of money overseas, but also has a high U.S. tax rate. There's different ways to play this outside of healthcare in terms of tax reform becoming a reality in the next couple of months. And as it relates to specific sector activity and sector impact, interest deduction, repeal of the medical expense deduction, et cetera, we've sort of laid this out as a Chinese menu. Emily Evans is definitely the person to talk to. And we're really translating this down to the company level and the sector level as the legislation becomes more fully formed. Again, we had a call this morning covering an update of our themes call, which outlines a lot of our broader view as well as the details across our individual stock picks.